Today, we're doing a special interview with Justin Holland from Eguana Technologies. We're going to get into the last quarter, the recent microinverter announcement, what the company's been doing in Europe, and why Hawaii hasn't necessarily been as quick as we would have liked to have seen at this point. Justin's going to give us a little bit of an idea of what we should expect over the coming quarters in terms of production capacity and what needs to happen in order for the company to get a deal with a tier 1 solar company. So buckle up, guys. We got a big interview for you. Let's get this party started. All right, Justin, thanks for joining us. There's obviously been two schools of thought online. There's been a group of shareholders that are somewhat disappointed with the quarter. They were expecting to see a higher top line revenue print, came in at 1.3 million. The previous year was 2.3 million. To the shareholders that were expecting this number to come in higher, what's your response?
Yeah, and going into the quarter, Steve, we wanted to see a higher revenue number as well. We could see some of the risks within the supply chain that we've been dealing with, working with the internal Eguana supply chain team. How we reacted to that was to expedite the transition to our partner Omega. That's going to be the key deliverable for the operations and the supply chain team in the current quarter. We need manufacturing coming out of Omega, what we call full turnkey, and inclusive of full turnkey is the Omega supply chain team. And what we get with the Omega supply chain team, just to put it into perspective for you, is we are now ordering through Omega 3,000 systems worth of components. And if you think back to how we mitigated the risk of the global supply chain disruption at Eguana previously, we classified materials into tier 1, can't run out, tier 2, zero risk items or low risk items. What we found in the last quarter, what we had as a low risk item, which happened to be a connector, you couldn't get connectors. Therefore, that shut our board manufacturer down. That then shuts us down. So that was really the miss on the revenue. The good points that I see coming out of the quarter are we did expedite to Omega. They are procuring already for 3,000 systems. We will start full turnkey at the end of March. And then we've got, 3 times the supply chain capability. We're working with a contract manufacturer who has board component level relationships that Eguana simply doesn't have. It's just an improvement all the way around the business. The better parts that we saw are the demand, and the demand continues to ramp up. New distributors coming on board almost daily. We see new order messages coming in from the sales team daily. The last piece, which is linked into the revenue, and look, we understand that when you have an expectation of revenue, you don't hit it. Certain people are going to be very negative on all other aspects of the quarter. We're going to mitigate that by expediting the transition to Omega, turning on their supply chain and purchasing capability, purchasing at a 5x rate to anything we've seen in the history of the company, and targeting a master schedule through April, May, June in the 750 to 1,000 unit range. And that's really what drove the changes internally when we saw fluctuations in our Canadian suppliers again through the December quarter.
So walk me through, what does that run rate look like at, say, the end of the March quarter, the end of the June quarter, the end of the September quarter?
So we'll fire up Omega full turn. And again, Omega is doing what we call assembly right now, assembly, test, and ship. So we do have Duracell units going out the door, which is fantastic. But what we're starting later this month is what we call full turnkey. They control the supply chain, they control the purchasing, they're getting the component inventories sorted out. They've got far more capability than we do on that part of supply chain management. And then you've got run rates constrained by the Eguana testing equipment. And we know, and we've talked about this, we've got testing equipment already commissioned for San Jose. That'll do 200 units per shift. So we will likely run double shift operation because the supply chain is now being managed by them. And you can see run rates that should hit in that 750 to 1,000 units coming out of June. We do expect that to ramp up coming out of September, and we're planning on that 3,000 range balance of the year. That's not inclusive of anything with Enfuse, the microinverter strategy. That's specific to Evolve and 10K max production.
So, sorry, when you say 500 to 1,000 run rates, that's quarterly or monthly?
So we're looking at coming out of June at 750 to 1,000 quarterly, but we'll have the capacity to do upwards of 600 units per month as a run rate exiting June. We can double that with additional test equipment, which we do now have on order.
Okay, that's pretty significant. Okay, so the big news since we last spoke is you guys are now into the micro inverter market,
Right.
Which is kind of surprising because in the MD&A in your recent financials, you say that you think that you could be selling product into effectively next quarter, that being the June ended quarter. So can you walk our audience through how you're able to just announce a microinverter and be able to sell it so quickly? What does the structure behind the microinverter look like?
Right. So the one thing to remember is we didn't start working on the microinverter now. We started working on the microinverter strategy 8 months ago. And we wanted to extend our electronics platform. We wanted to make sure that we didn't, going forward, get forced into being a niche player that only had storage capability. All you have to do is look at the competitors out there. Enphase Solar Plus Storage, Generac Solar Plus Storage, Tesla Solar Plus Storage, Eguana Storage only. It's not hard to see where that goes. So we started this a long time ago. The bigger piece for us was we didn't want to come into the micro market with a single microinverter. So we spent the time to make sure we had a single, a dual, and a quad. Now, that has a whole ton of advantages for the company, but the bigger part was become solar plus storage, make sure that we hit both key channels and that we can handle all electrical infrastructure required for renewable energy. And that's really what drove the move.
So is the intention to sell these under the Eguana brand, or will you be using these with I don't know if you can discuss this publicly, but the Duracell brand?
So we will go premium brand in the US market. We're, the feedback from the distribution channels is they are screaming for a competitive micro to the IQ7. And right now in micro channels, Enphase is commanding an amazing market share, well above 80%. So there is room to have more competitors. So we will come out with the premium brand in the US. We will further launch the Eguana brand into the European and the Australian markets later this year. But we wanted to get going and offer storage plus solar for the US as quickly as we could.
So I don't know a lot about the microinverter space, but I started doing some homework on it, and it looked like it's actually pretty concentrated. There's a couple companies who have a tremendous amount of market share. Mm-hmm. How is it that you guys are going to be able to just slide in there and compete against, say, Enphase and SolarEdge?
So one is the branding, and people are screaming for Duracell in the US market. We're seeing it. We're getting calls from distributors. National deals are being done weekly right now. We're extending our coverage from roofing distributors to electrical distributors to renewable energy distributors. So we're seeing a need. And one thing that distributors don't like is concentration. They don't like monopolies. It's too risky for their business. They want to have choice. What we will offer is another big brand choice. The other thing that we like about this, and I think what the distributors like about this, the microinverter is inherently simpler than the storage system. You're not going to run into supply chain difficulties on a microinverter because there's only one circuit board in the microinverter. You've got about 50 parts to manage. Contrast that to an Evolve, the 5 kilowatt Evolve, never mind the 10K max. The 5 kilowatt Evolve has 9 circuit boards with over 750 parts. So we wanted to do a number of things. Make sure that we had a product that we could release that's not going to be impacted by the global supply chains. This is why you're seeing companies with micros and with solar systems still generating very healthy revenue, because you're not impacted by the supply chain on the microinverter. So we wanted to check that box. But we also knew we had to offer solar plus storage on a go-forward basis, or we would get phased out of the mainstream market. That was point 2. And point 3 was, it's opened up a massive channel opportunity specific to residential rooftop installations without the storage system. How we see this unfolding internally is, we think the micro revenues will jump up very quickly. We think they'll outpace the storage revenues on the near term to midterm. Then you'll see the storage revenues really start to outpace the micro. That's how we see it going. So it brings better margins to the company. It brings more consistency to the revenue projections for the company, and it removes some of that supply chain risk that we're seeing on the storage side.
Okay, so something I got to follow up on is we had Chris DeBone from eGear on in the summer along with Brent Harris, and it looked like Hawaii was going to be guns a-blazing, and we haven't really seen a lot. I think that there's been 2 purchase orders. It started off really strong, and has we really haven't been hearing much. Can you give us an update of what's going on in Hawaii and why it hasn't really necessarily accelerated to the extent that we would have expected at this point?
Yeah, and it's very interesting, and we're surprised the PUC's waited this long, but they are making changes to that VPP program, and most of the people that have bought in so far are people with existing solar rooftops, and they've been buying in, and we're seeing numbers, kind of in that 4+ megawatt. What they're actually seeing in that are the permits. And when you look at the installations, Chris DeBone thinks that we have over 80 to 90% of the installations relative to the program. The program just hasn't taken off. So the PUC is starting to put pressure on the utility. The utility is revamping aspects of that program to re-roll it out to see if they can get that moving at a much faster pace. Market share, we're right where we thought we would be. We know we've got one of the best, if not the best, VPP solution out there, but that program did not take off the way that it was forecasted to do, and they are making changes between the PUC and the utility to start ramping that up.
Okay, so another area that caught my eye in the MD&A is when you guys talk about potentially working with a tier 1 solar company and how you're working through a bankability study. What ultimately does a tier 1 solar company need to see in order to engage with you guys and go and make that big sort of purchase order that is it's going to make a big splash for shareholders?
Yeah, so there's a couple things with that, and the bankability study, it's a 2-part study. So we've gone through phase 1 already. We started it, I think, last November. So we've gone through the first phase of that. But what the bankability study does is it gives you third-party validation to the reliability of the technology, which then allows the solar financing company to put it through their financing channel. So that's step 1 that you need to hit to get these large solar financing companies. Step 2 is you have to show them the production capability. Hence, one of the other reasons we've expedited to full turnkey. We've had them review all of the capacity. They've reviewed EMS already. They're quite happy with that. So they need the second stage bankability, and they need to see the production output. Once we have those 2 things, we're quite confident on where that relationship's going to go.
Okay, so effectively, how I'm reading that is, if you guys get to the point where you hit that sort of big run rate with Duracell, that could just on its own lead to
Correct.
a deal with a tier one solar company, or do you think that
Correct.
that would happen out of Alberta?
No, I think it'll happen when we transition to full turnkey. That's where the capacity is gonna be. They're manufacturers. We want that partnership to grow to where they're kicking out, thousands of systems. That's where we need to be to land the large solar financing companies. It'll be the output out of San Jose for sure.
Okay, and last question for you here. When we're talking about Europe, this isn't the first time you guys have dropped this in the MD&A, but you're working with a utility company in France. What can you tell us here? Europe's obviously been, hasn't been as exciting as I think shareholders had hoped with the relationship with Hanwha Q cells. Where is Eguana with Europe, and is there anything near term to get excited about?
I think the situation in France is very exciting. This started about a year ago. We went in, the utility, and again, I will be somewhat cautious here. The utility went and did a global RFP. We came in second in that RFP. The winner, the ultimate winner of that, was not able to produce the units to the specifications that they turned into the utility. The utility has since reached back out to Eguana to see if we still have interest there. It is a VPP driven opportunity, so we are quite excited to get going with them. We can see likely, and again, the utility stuff never happens fast enough for anybody. But we can see a pilot second half of 22. We think will perform well there, and then I think you start seeing fairly significant growth. Now, obviously, there's a lot of unrest in Europe right now. We don't know what the implications or what it's going to look like coming out of that, but we can see renewables picking up as a result of that outcome. So there's a few things that we're excited about in Europe, but clearly the utility opportunity in France would be the first one.
All right. Well, Justin, thanks so much for hopping on here and doing this. We continue to be shareholders and are optimistic about the future. We've staked our reputation to this name, so we are wishing you the best of luck here in the upcoming quarter. And it sounds like the big quarter, from what I'm reading, is going to be that sort of June ended quarter where we're going to really start to see the company really start to show.
Yeah,
where all this
you
work is
got
heading.
it, Steve. What you want to look at is you want to see some near term milestones. You want to see an update on the manufacturing progression out of Mega. You want to see the full turnkey start. You want to see that kind of at the end of March into the first week, 2 weeks of April. Once you see that come out, and we'll have some stuff out for the shareholders to let them know that we're on track with that. When you see full turnkey, you know that behind that is the procurement of up to 3,000 systems. You know that the trailing indicator of that is the revenue. So leading indicator, transition to full turnkey, the supply chain transition to Omega. Those are your two leading indicators. You should see that kind of in the first half of April. And then the trailing indicator will be the relative revenue ramp coming out of June. So that's kind of the near term, what to look for, and then post. But we won't have to wait to late summer to see the impact of expediting the transition. You'll see that from the leading indicators, which is the production output coming out of San Jose, April, May. You got it exactly.
Awesome. Thanks so much for doing this, Justin, and I look forward to chatting with you in the future.
Sounds good, Steve. Thanks. Take care.
All right, guys, that does it for today. Please, if you're watching us on YouTube, hit that like button, subscribe, and ring that notification bell so that we keep doing more of these interviews and more of these videos for y'all. Thank you, everybody.